The S&P 500 is nearing a critical level of resistance that we need to talk about ahead of this crazy busy week. We'll talk about in this video the S&P 500, the Nasdaq, we'll take a look at the dollar, and we'll look at gold and check up on each one of these, looking for potential trade setups that may be useful. If you enjoy my videos as we get started, hit the thumbs up button and let's go. So I wanted to just point out that on Wednesday, in case you aren't aware, we do hear from the Federal Reserve. We have the statement, of course, as well as the rate decision and the press conference. And while there isn't expected to be a rate cut this time around, we may hear some clues about what the Fed is thinking for upcoming meetings. And as you likely know, unless you are very new to fundamentals, what the Fed chooses to do next with interest rates is going to be pretty critical. But let's take a look at this S&P 500 daily chart and talk about something that's been going on. So it's pretty clear that the bulls have actually done some work here. We've seen some higher lows, and we saw a key breakout above that level that I've been talking about quite a bit on the channel. From a price action perspective, the S&P 500 looks like it's done some pretty good work here, but there's still work cut out for it ahead. Now, what I mean by that is, as I just discussed a moment ago, you have a key level of resistance. And I want to talk about this because while we broke through this level, we've also had 1, 2, 3, 4, 5, 6, 7, 8, 9 days where we basically have advanced higher in a row on the S&P 500. And this is a pretty good stretch. And usually when you get that kind of stretch, you do see some kind of pullback, some kind of retracement. As we know, most of the time markets do not move in straight direct lines. So when we talk about the S&P 500, as it advances higher into this area, we also have to ask ourselves, what is fueling the flame from here? We know that NFP, we also saw earnings, right, from key companies, right? The earnings of these key companies propelled the S&P 500 higher. NFP was overall a positive signal. So we have a lot of our good news behind us, and we're nearing a key level of resistance. So what is that key level of resistance? Well, what you're looking at here is the 200 daily moving average. And this is a very important moving average to many technicians across Wall Street. This is something that you hear all the time when you hear, these guys talking about the S&P 500. They say, we're under the 200-day moving average. And you'll notice that the last time we broke through this level, we actually retested it, and it was an area of strong kind of holding for the bears before we dropped very precipitously. So as we near this level once more, again, we've had the big sell-off, we've seen the retracement, and it seems like bulls are kind of taking back their bearings. But the question will be, the big test for this week is, if we do come into contact with the 200-day moving average, what does price do from there? Do we see a strong rejection and sellers take back control of this market? Or do we actually see a breakout and failure from the sellers to hold? In my opinion, that would give us a solid bearing back towards those highs. So we're watching price action out of the gate going into this week, as I think it's pretty critical to the story. Overall, I do have a bullish bias on indices, and we'll discuss this in just a moment. When we take a look at the S&P 500, the Nasdaq, the Russell, and the Dow, these are getting bullish readings for me on my system, the Edge Finder, which basically helps me to look at sentiment data like the Commitment of Traders report, which we'll look at a moment, retail positioning, seasonality, trend, GDP, manufacturing, services, PMIs, retail sales, inflation, all sorts of key economic data as well. So right now I do have a bullish bias on these things. However, there's one of two scenarios when it comes to the S&P 500 and the Nasdaq that I'm watching very close. First of all, this 200-day moving average, I would like to see either one of two scenarios. Either we react negatively here and we go back and hold support. This would still be a bullish catalyst. Like I said, we've had a really good stretch to the upside. I wouldn't be surprised if we do get a bit of a corrective move going into this week, in which case I would actually look to buy that if you do get a good sized dip intra-week. So I am bullish going into this week. This is scenario number one. Scenario number two would be the bulls are so strong that they confidently break through this level, and we're back kind of rinse and repeating the same concept, but instead looking for the green path rather than the yellow, right? A strong breakout from this key level of resistance, then looking to buy the retracement of that area. So I do have a bullish bias. I do think that there is a stronger chance that we've bottomed than that we go back to those lows. Now, anything can happen, and this is why trading is difficult, because there's no certainties. But I'm pretty convinced that the worst is behind us in terms of the initial wave of trade fears, right? We have been seeing some positive developments in terms of market sentiment around trade. And I do think that likely most countries are going to want to come to the negotiation table, including the US and China from here. I think that's an optimistic view, but I do also think that it's a very possible idea as well. That being said, I do think we are a bit stretched here, and I'm not personally buying this market at this level. Like I said, either a pullback or a break and retest at these areas looks more attractive to me. For the NASDAQ, S&P 500, the Dow Jones, same story, but we're a little bit further away from this key level. And then finally, taking a look at the Russell, we are very far from that 200-day moving average. While I do think this one will probably follow with the rest of those indices, I do still think we have some good size room to catch up on the Russell. Of course, my favorite of the list right now is the NASDAQ. We are also getting some very strong scores here for the Dow Jones. So I'm watching the Dow, I'm watching the NASDAQ, but price action-wise, I do like the NAS the best as it is close to that 200-day moving average and potentially breaking out this week. So we'll have to keep an eye on that. Let's take a look now at what indices were looking like on the institutional positioning this week. So if we take a look at the commitment of traders data, we see some pretty interesting stuff. Now, when we take a look over here at the net positioning, we still see NASDAQ as a 62.5% lean towards the long side for institutions, and Dow Jones is beating that slightly at a 63.3% long, and of course, 36.7% short. So NASDAQ and Dow are preferably long by institutional money. Now, when it comes to the S&P 500, it's a little bit more mixed, and 57.11% are on the short side, according to the Commitment of Traders report. Scrolling down, we can see what I think is very useful for day traders and swing traders, which is the latest week-to-week COT buys and sells. So this shows us big money moves in the markets. And when we look in closer here, what we can see is that the Dow Jones was actually the leader of the US indices here. They actually added significant long contracts and decreased short contracts, resulting in a very bullish week for the Dow Jones Industrial Average. So that gives the Dow kind of a little bit of an edge in terms of commitment of traders data, showing institutions really favor the Dow Jones right now, maybe liking that value stock proposition in terms of where to park money. The Russell was also a pretty big winner. You can see some net long positions added and short contracts being decreased. However, the overall positioning for the Russell is pretty mixed here. You can see longs and short contracts pretty even across institutional positioning. On the sell side, we actually saw the S&P 500 pretty significant closing of longs and closing of shorts, resulting in not too much of a bias one way or the other. But then the NASDAQ was actually a pretty clear seller. They added significant amounts of short contracts right here and added just a modest amount of long contracts. So the clear winner in terms of institutional money moves this week was definitely the Dow Jones, followed behind by the Russell. So just something to think about when it comes to the institutional positioning of this market right now. I think the clear winner overall is the Dow Jones and the NASDAQ. But this week, definitely the Dow Jones was the winner in terms of net accumulation. While we're on the subject, while we're looking at institutional moves, we can also see gold here, another very crowd favorite kind of item here. There was some net selling of long positions or closing of long positions and also decreases in short contracts. So kind of a boring week for gold. If we take a look at the dollar here, we see they added some long contracts and decreases some shorts, so a slight positive lean. But again, the US dollar is actually kind of still mixed in the middle of this report, about a 50-50 lean when it comes to institutional positioning. If you'd like to play around with the tools that I'm using here, the Edge Finder is currently 40% off. It's our biggest discount that we do all year long, celebrating 3 years since we launched this tool to the public. If you don't have access and you want to access the tools that I'm using to scan the markets each and every week to find the trading setups that I take, consider exploring the Edge Finder with the links and promo codes in the description down below. So moving on, I wanted to talk a little bit beyond just indices. Up next, we'll take a look at the US dollar. And the US dollar is an interesting story right now. Let's start fresh here, and I'm going to remove, I'm just going to go to pure price action here for a moment. And we'll talk a little bit about where we're at on the dollar index. So for the daily chart here, when it comes to the dollar chart, you can see I've got all sorts of key levels. And I've had these levels drawn for some time. And at one point, all of these levels were key levels of support. And now we see the exact opposite. buyers have not been able to hold key levels, and that has been the theme for some time. I actually maintain a bearish bias on the US dollar, and we actually just got our first retest of a key level of resistance. Now, I know we kind of have to really scroll out on this chart to see it, but this key level, the 100.5 area, was a huge kind of floor for the dollar index before we advanced higher for several months back in November and December of last year. But then at the turn of the year, we really started to see sellers come back into the picture and seeing this sell-off continue to the downside. So when it comes to the dollar index, this is a brief pullback that we're starting to see. If we draw from this previous swing high to where we really dropped hard, we are nearing the 38.2% level of retracement, which is very close to that key level that we just got done discussing at that 100.5 key critical level. So this is the first retest that we've had in a minute here. The Dow Jones, the dollar index, right, DXY, has been in free fall here recently with very little pullbacks to speak for. We do now see that pullback coming in, and I actually initiated a long position on euro dollar, which is by proxy actually a short position on the US dollar and a long position on the euro as a counterpart. Part of the reason for that is because on the Edge Finder, I am getting some confirmations here that lean heavily favorable towards the euro in terms of recent upbeat economic performance. Actually, where's my euro here? Maybe we lost a little bit of that score back down to neutral. Well, let me show you something that I have been looking at, which is if I go over here, let me find it. Give me 1 second, I'll look for it. So this is a new feature. That's why I had to look for it. Under economic heat maps, we have for Edge Finder users, the Eco Surprise Meter. And this is a really cool new indicator that we've been working on. So what you can see here is that the economic surprise meter shows all of our countries, and specifically what this is looking for is it's building out a score based on how readings for key economic reports like CPI or NFP or, unemployment rate, right? All these key economic metrics, how are they coming out relative to forecast? So recently what you could read, the way you would read this is that the US has been missing expectations a lot recently, showing some potential weakness in the economy relative to forecasts. When we compare that to the euro, however, or the UK, or Kiwi, right, or New Zealand, right, we're seeing some strength in those places relative to forecast. So part of the reason that I have a bearish bias on the US dollar is if we actually pull up just in isolation the US economic heat map, you can see that the US dollar's impact, according to a lot of our metrics here, is actually negative. This past week, let's recap some of the key data. So we did get a good NFP report, and that is a positive thing for both the currency and the US stock market. But stick with me here because that's about where it ends in terms of positive news for this past week. ADP numbers were weak. That is bearish for the US dollar, right? So the surprise compared to forecast was weak. And we can continue on with that theme and see that this week we also had job openings posted in the United States. That came in weak. That's weak for the US dollar. When we take a look at jobless claims, people filing for unemployment, we actually saw that number rise, which of course, rising unemployment stuff, not so positive in terms of the US dollar. We also saw unemployment rates stay unchanged. That gives a neutral reading or neutral reading to the dollar, right? And then wage growth actually faltered just slightly, which is also not particularly bullish for the US dollar. So we got a lot of data this past week, and a lot of that data suggested a little bit of cooling in the US jobs market. Last week was heavy on the jobs data. By the way, for Edge Finder users, notice how this text is orange. That orange text means that it came out in the last 7 days. So our recent economic data has been suggesting more softness in the US economic data. So that's the way you would read that. So the US dollar is still on my my bearish list, if you will, predominantly for this reason that I just got done discussing. So when it comes to the US dollar, I basically initiated a long position on the euro dollar, but I do have an interest in building a short position on the dollar against a basket of currencies. So what I mean by that is that I have a euro dollar long position, but I would also really like to get set up with a pound dollar long position, for example, but I'm still waiting on the pullback for that. So if the pound dollar gives me a retracement down to this 1.31 level, that's on my watch list for possible long side continuation plays based on the economic data and price action, which is clearly in an uptrend for the pound dollar. When we take a look at, for example, the Australian dollar, we saw a bit of a breakout on Friday. If we get some sort of break and pullback, I'd be interested in that as well from a technical and fundamental perspective. Take a look at the Kiwi dollar. If we do get a retracement further in this one, this is a key level that I've been watching for a couple weeks now. So I'm going to continue to watch Kiwi dollar, see if I can get that entry. So what you'll notice is that, again, the US dollar is giving me a pretty clear bearish signal on the edge finder. And so I'm looking to express that viewpoint in the form of long other currencies, short the US dollar. Now, when we take a look at the economic heat map, again, you'll see stocks are getting a little bit of a neutral reading. Why are stocks impacted slightly less negatively than US dollar? Well, right here is your differential. Take a look. PPI and CPI, these are inflation readings for the United States. They both came in soft. And while that's not good for the US dollar because it suggests rate cuts are on the way, which is perceived as a bearish thing for the US dollar, both of those things are actually very good for the US. Lower inflation, or I'm sorry, better for US stocks. Both of those things suggest that the Fed could cut rates, which is stimulative to businesses and consumers. So I'm watching indices with a bullish bias. I'm watching dollar with a bit of a bearish bias. So let's keep going because, again, that covers some of the currencies. What about the dollar yen? I've been talking about this. A lot of people have been having questions on my channel here recently. I know the dollar yen is a favorite for many. And I do want to just ask, if you're enjoying the stream, make sure to, or video, make sure to hit the thumbs up button. But also let me know down below, what currency pairs do you trade the most if you're an FX trader? And if you're not an FX trader, do you trade gold? Do you trade NASDAQ? What's your favorite thing to trade? I'm just curious. Let me know down below in the comments section. I do read all my comments, so I'm just curious to hear from you guys a little bit more. So dollar yen, what you'll notice is back kind of in the neutral camp here for me. Where do we go? So dollar yen was down here, and now we see dollar yen. Actually, where is it? What I could do here, if I want to just scan this, by the way, little cheat sheet for you. I'll go major currency pairs, and boom, there's dollar yen. Actually neutral and really flipped. What we saw is trend reversed here in recent times, at least on the shorter time frame here. I'd be a little bit cautious on a bigger picture. You know, we may have room to continue to squeeze higher, but I'd be cautious once you get up into this 148 level. And I've indicated on my channel here recently that would be a potential short for me if the edge finder flips bearish around that territory. So I am looking for retracements up into that 147, 148 region for possible short side trades to continue. So I'm watching that close. In terms of other yen crosses, really not too interested in euro yen and pound yen. These are pretty choppy currency pairs at this time. And we can actually just isolate for a second minor currency pairs just to see that. You can see there's a whole list of them on the edge finder. We have quite a few charts that we watch. Kiwi yen actually getting a bullish reading. The Aussie yen getting a bullish reading. And then the weakest of the yen crosses would be CAD yen so far. So we'll keep an eye on that. Going back, I want to also just touch quickly on commodities because we're now going to take a look at the gold world. Let's go metals here really quick. And you can see gold is confidently back in neutral territory, which it's been a minute. So if you guys have been watching the channel in recent times, then you may remember that for a minute there, I was very, very bullish on gold and actually had my best trade of the year by far on gold here just recently. For a while, the softness in the U.S. economic data was strong, but then what we've what's sort of happened here price action wise is you had a very nice uptrend, pulled back. I actually stepped into a trade right around this area at key level support, and this market absolutely ripped. It was my best trade of the year, resulting in $40,000+. Now, I do want to just say, for context, I took another attempt right here, lost some money on that one. And I took another attempt recently around this area and lost about $5,000. So just some context, in order to have the crazy big winners, I do also have to have many times, several losing trades that are still sizable amounts. So I just want to keep context in that, as it is important in my channel to keep transparency in what I do here. You can go back on my channel if you want to see that trade. I closed the P&L on camera, so you can check that out if you'd like. But anyways, with gold, many people are wondering now, is this the pullback we've been waiting for? Is it time to buy gold? And again, I'm very systematic with what I do, right? I trade the same thing each and every week. It doesn't change a whole lot. I'm looking at the edge finder, I'm looking at technical setups. And so for me, the answer would be no. There's no reason for me to get bullish here. Why? Why are we not bullish on gold at this time? COT data is bullish. Institutions still very bullish on gold. Seasonally, it's a good time. Well, retail positioning is holding it back here. We'll take a look at that in a second. Trend has flipped a little bit more bearish here recently. Take a look at interest rates, yields really quick. If we take a look at this, this is an input into our system here. Yields actually jumped. That is perceived as a potential bearish thing for gold. So we'll have to keep an eye on that. Bonds got a little bit more, little less attractive, and typically gold sort of follows suits with bonds, although that is really broken down in recent times with the concern around the U.S. validity in terms of all the trade war drama and stuff. People concerned about investing in the United States, whether that be bonds, stocks, dollars, etc. Anyways, when it comes to gold, from a price action standpoint, from a bullish trend perspective, I would give this a check mark. But from a fundamentals perspective, it's not really hitting. So let me show you my 3 categories that I look at when trying to determine if a trade setup is there for me. I look at technical analysis, which in this case, I would say looks very strong. But that's where the good kind of vibes end here for gold. When we take a look at fundamentals, right? The dollar's weak for a reason. That is true. But we've had some trade deals, and Ukraine and Russia seem to be making, or Ukraine and the U.S. seem to be making some deals with the mineral deal closing. That's a bearish catalyst because peace, right? As weird as this sounds, gold does not like peace, right? Gold likes uncertainty, war, recession, breakdowns, right? And so the development in Ukraine, Russia, the U.S., the negotiations of the mineral deal and all that sort of stuff is a bearish catalyst for gold. And I don't necessarily think that the bull trend is dead for gold, but I'm just going to wait because I have other things that I really like a whole lot more. From a technical perspective, key levels of support can be found around this 50% retracement and the 61.8%. I do think you're actually entering into a pretty good pullback area if you're bullish. I wouldn't be surprised if this thing actually does continue its bull trend from here. But for me, I really need to have all 3 of these things in line in order to really give me a confident bullish or bearish reading. So for me, sentiment analysis, let's go take a look at that. So sentiment analysis is kind of mixed because on one front, you have people really scared. And I'll show you what I mean by that. If we take a look at the AAII Investor Sentiment Survey, now this is related to the US stock market, but stick with me. What we can see here is that when respondents answered, are they feeling bullish or bearish about the outlook of the stock market in the next 6 months? A vast majority of people are saying that they are feeling bearish on this market. Well, the reason that's interesting is although this is for S&P 500 outlook, this still impacts gold in a sentiment related way. If people are really bearish on the stock market, oftentimes gold could potentially positively be benefited from that as it acts as an alternative investment class for people who are maybe not so interested in buying stocks, but they also don't want to sitting in the US dollar. So what do? They can buy things like gold, they can buy things like real estate, they can buy things like bonds. Alternative options become a little bit more attractive when people are not interested in stocks. And that has kind of been the theme for the last few months, and arguably would be part of the reason why gold has had a really good stretch in recent months and actually even the last few years. So it is worth mentioning that sentiment is still very ugly out there. People are concerned, and that could lead to some continuations of this uptrend that we've seen in gold in recent times. Now, when we take a look at the put to call ratio, that tells a bit of a different story when we look at the S&P 500. Notice how we went from extreme fear in this market to now kind of back into neutral territory for the put to call ratio. Of course, this has shifted back a little bit from its extreme kind of cliff dive fear, if you will, simply because the stock market has bounced back pretty nicely here recently. But when we flip over the put to call ratio to gold, and yes, we do have gold contracts here, or gold options contracts being traded. GLD is specifically the options market that we check. You can actually see something quite interesting here happening. The extreme greed level has actually triggered for calls being demanded for the gold market. Now, why does that matter? Well, if everybody is now starting to load up on calls on gold, and that seems to be the crowd mentality, that makes me a little bit cautious myself when it comes to buying gold. Because again, if the crowd seems to be now bullish on gold, that makes me a little bit nervous. So we do see some crowd sentiment favoring gold here in recent times, as it seems the volume for calls has really expanded relative to the volume for calls. Volume for puts. So again, people are very bullish on gold now, and that makes me a little bit cautious, especially as we start to see this thing pull back. This is oftentimes what we see at the end of a trend is, all the bulls start lining up here after we've had a big run thinking, oh, it's got to continue. Now, again, I'm not saying that I think gold is going to crash. I'm just saying for me right now, when I look at my factors, the technical, fundamental, and sentiment analysis that I do, I just don't have quite enough conviction to really get long gold at these levels. Now, if you get some sharper pullbacks from here, again, I think it's fair to say when we look at gold's price action that we could still be in a very healthy uptrend, even if we do see another week of selling in gold. So if we come down to 3,100, that is by no means, in my opinion, bearish. We've had an exceptional run in gold, and I do think it's fair to say this thing has had a great run. Maybe we're finally starting to see a topping point. Maybe that Ukraine, Russia, and US deals could continue to kind of cause a short-term sell-off in gold. And actually, from a long-term bullish perspective, maybe that's the healthy correction that we've been waiting for. And maybe that gives people who have been patient on the sidelines a chance to actually pick up gold that have been looking to do so for the long term. Again, gold is something I absolutely love to trade. And in some capacity, I am always bullish on gold for the long term, as I think it's a great hedge to have in a portfolio to turmoil and uncertainty, which is at every turn in the history of the world, right? So it's unlikely to stop anytime soon. So I do like the idea of having gold in a portfolio as well as trading it on the long side when opportunities present themselves. But for me personally, right now, gold is not quite ready to take trades, but I'll keep you guys posted as always on the channel. Make sure to hit the subscribe button if you haven't already and post notifications. We'll keep going. We'll move on to our next chart here. Taking a look now at silver. Silver, very different, right? Take a look at this, screenshot this mentally for a second, and then look at gold, right? Gold and silver have been acting very differently here in recent times. They've lost a little bit of their correlation in recent times. For silver, when we take a look at the Edgefinder's top setups page, you can see silver's getting a slightly higher score at +2, but still very much neutral. I think when we take a look at price action here, you have support around these areas, you have resistance around these areas. I'd really like to see a breakout one way or the other, and then that would give me a little bit more confidence in price action. But again, when I talk about this stuff, guys, you have to understand, I know sometimes what happens is the people will see me bullish on gold, and if they agree with me, they're like, okay, awesome, Nick, this is great. But then the second I go neutral or bearish on gold, those same people get upset. They're like, no, Nick, you're wrong about this. But look, I'm not doing this. I have a system that I've followed for years. My system is what gets me in and out of trades, not my gut feeling, right? So do I think gold can continue? My gut feeling actually says yes. My gut feeling wants to buy gold. But my gut feeling has gotten me in a lot of trouble in my trading career. What gets me into good trades is staying systematic with what I do. And so if I don't have something on the bullish list, right, there's a very small chance that I'm actually going to trade it. So sticking to what we know here, we have kind of a list here of bullish and bearish assets. Let's get back to the source here and move on from gold for a second. You guys know I love trading gold, but I'm not in a one asset trader. I trade a little bit of everything for this very reason. Sometimes things look more attractive. We've already talked about US stocks. Let's talk about Chinese stocks. The Hong Kong 50 index is what I'm going to look at here. HK50 is a CFD variation that you could pull up. So when we look at Chinese stocks, and I'm going to do this on a weekly chart here for a second, I do think that the Chinese stock market could be a continued sleeper in all of what's happening. I do think that around the corner at some point or another, the US and China are going to make deals. I think that that is likely to happen. I think both countries know that that would give some prosperity to both. And as long as there are decently favorable conditions to both sides, maybe some compromise from the US, some compromise from China, there is that possibility that we get deals. And deals, I think, disproportionately actually favor China since, again, the US imports massive quantities of things from China. And China's stock market has already been doing pretty well despite all the trade war stuff. I mean, let's face it, the stock market for China is not back at the lows, which some might have argued we'd be going towards. We're actually seeing some higher lows on the weekly chart here. So when it comes to my perspective on Chinese stocks, I would like to see a clear breakout through these highs, and then any sort of pullback, I would be interested in longs and continuing that move. Specifically, an ETF that I like to trade when it comes to Chinese stocks is FXI. FXI is an ETF that tracks Chinese stocks, so I'll be watching for that kind of move on this chart. Moving on to our next list item. So Kiwi Yen, we'll just do a quick rapid fire on some of these charts. Kiwi Yen is a bullish rating on the Edge Finder at this time. You guys may have known if you've been watching the channel that I am bullish on the Kiwi dollar. And when we take a look at the Kiwi against the Yen, I actually love this chart. Looks like we're trying to break out of some key levels of resistance. In fact, we may already have by drawing this level as a support. You can see we've really broken through some key levels here. The next up seems to be this 87 level. So for Kiwi Yen, I really like this trade. Looking for something like this or something like this going into this week. Both of these look really good. And what you might notice is this kind of looks a little bit like what's been going on in the NASDAQ and the S&P 500. That is because this currency pair does typically have some positive correlation as people buy the yen when they're fearful, and they typically buy the New Zealand dollar when they're feeling a little bit more optimistic about global situations, right? Global economy, global everything, right? So Kiwi Yen does typically behave a little bit like the S&P 500. So just take a look mentally at this chart, and then we'll take a look at the S&P. You can see there is a bit of a recent correlation to this downtrend and what we saw in Kiwi Yen. Next currency pair or next chart we'll take a look at is the Australian dollar, Canadian dollar. Not a chart that I look at too often, but let's just pull it up because the Edge Finder is giving us an idea here. Don't love this chart, probably just going to skip it. Big drop off, just price action not giving me any sort of clear trend. And if we were to put on a moving average here, you can see this is a really mixed viewpoint, actually coming into some longer term levels of key resistance. So probably going to skip that chart. Taking a look at the German DAX. If we take a look at German 40, we'll go up here. You can see the DAX has performed really wonderfully here. And actually that big sell-off, look at how beautifully this has bounced back. Just showing despite even, the positive news and trade developments, a clear winner here has actually been foreign stocks. We see Chinese stocks, the German DAX. These things are almost back to their all-time highs. Meanwhile, the S&P 500 is still well off of its all-time high. DAX has some relative strength. I'd be a buyer on weakness. If you do see some retracement levels, I'll probably be looking to take these trades myself. By the way, if you're wondering or if you're looking for a better brokerage out there, whether you trade Forex, CFDs, futures, or stocks, whatever you trade, there's several linked in the description down below that have special sign-up perks available to you as a viewer. The reason I'm saying this is because, again, most people don't know that when you sign up for a brokerage, you can actually get some really sweet deals like sign-up bonuses, deposit bonuses, free stock shares, all sorts of stuff. And if you haven't already, explore the links in the description down below for those special offers. The other thing is if you go to a1trading.com/brokers, you can explore all the deals that we've put together with our broker partners for my subscribers. So check them out there. That's a1trading.com/brokers to explore more. Let's keep going, see what else we've got on the list. The DAX, Kiwi CAD. We already looked at Aussie CAD. Those two are going to probably look very similar. Going to skip that. Bitcoin is a big one, though. Let's take a look at Bitcoin and talk about this chart. Probably the most pure version of risk on, risk off Bitcoin. We actually have a really cool chart for this. If we go under our market sentiment, if you have the Edge Finder, you may not have known this chart. I actually was having a conversation about the Edge Finder with a customer that uses it, and they mentioned every single day, they're like, I'm still discovering new charts I didn't even know I had in the Edge Finder. And I think that's just, as the team behind the scenes, there's a couple of us that work on this tool full time. It's an amazing experience to hear people like every day, they're like, oh, I love this new tool or this tool that you added. It is a really cool feeling, as you can probably imagine. People are like playing in our sandbox, basically. But the Bitcoin to gold ratio is showing something really interesting has turned in this market. So what we saw here for quite some time, for most of 2025, is that Bitcoin has underperformed gold, right? Gold was getting way more attention with all this fear. But then we recently saw a bit of a shift. Risk on sentiment started to take precedence as Bitcoin started to bounce back very sharply relative to gold. So seeing a little bit of a shift. Is this a signal that we are now entering into a risk on environment? Very possible, right? So we'll have to keep watching how stocks and Bitcoin behave, but the price action looks very good for Bitcoin. We've broken out of this downward spiral here, and I actually do think that, again, you may either get a pullback into this area, in which case I'd be a buyer, or a pullback into this area, which I would also be a buyer. So I'm watching Bitcoin going into this week. I do have a risk on lean, as you can probably tell by this video, and Bitcoin is definitely on the list for me as well. Kiwi Swiss will be one that we'll take a look at as well. Pull this one up, Kiwi Swiss franc. And this one, don't love the chart, right? Still kind of a bearish daily chart, so probably not one that I'm going to look to trade. Euro Kiwi, we'll take a look at this one. Euro NZD, we can pull this one up. Euro NZD getting a short bias, and I actually don't hate this idea here. You can see we flipped a little bit bearish in terms of price action as well. This key level of support did not hold. And so, if you get something like this, like breaks, retests, may actually be some nice bearish continuation plays to look out for this week that I'll keep an eye on. Euro pound, and this is a currency pair I actually am very interested in. I really like trading Euro pound. It's a low volatility currency pair, meaning it doesn't move a whole lot in terms of pips. This massive move, just conscientiously think for a second, how many pips do you think that is? It may surprise you because it's usually less than you think. That's 500 pips. If you were to see a move, for example, on pound yen, and a similar kind of extreme move, that's 2,500 pips, right? Or even this move is 1,500 pips. So when we go to something like euro pound, this is a currency pair that moves a whole lot less. And this is the daily chart, remember. It moves a whole lot less than a lot of other charts. And when we get granular on the price action of euro pound, I don't really want to rush into short positions here, but there is some interesting stuff happening. We saw a key level of support now trying to act as resistance. So you can see price has broken underneath this level, and so we're watching to see how price reacts here. So I do have a bearish bias on this one. I don't love the chart. I still think that we're kind of in an overall upward trend. Here's their moving averages. We broke through that downtrend, huge move up. This could still be in the context of just one big pullback. At 61.8% retracement is a little too close for my comfort level. So I'm going to continue to have this one on the watch list. You guys know my watch list is generated for me every day with the Edge Finder. That is kind of the purpose of the tool, is to generate a watch list. And I think that's really the best way to express this is not a list of things to go buy and sell. This is a watch list, right? The top setups watch list allows me to go look at some of these charts and to use my own technical analysis and personal trading strategy to incorporate these ideas into my trading. Now, again, I've looked at a lot of different charts here, and you can see there's a lot of stuff setting up, a lot of stuff going on, but I actually have a very light number of trades on. Current positions for me. I mentioned earlier, I've got two currency pairs that I'm trading. Euro dollar longs. I am long at this area and willing to add another long position if we go down to 1.09 or 1.08, but do like the euro dollar for some continuation plays. I'm also long CAD CHF. I have two currency pair or two entries on this one. This is a longer term kind of bet on the trade negotiations potentially or improving. If you do get positive trade negotiations, CAD Swiss would likely be a beneficiary, as Canada, of course, under scrutiny with the U.S. and the trade stuff there, and then Swiss franc potentially could weaken in the event that you get some stability globally from trade war negotiations cooling off. So I do have a position around this area and a position around, actually my second position is around this area. So still underwater on this position, but continuing to hold and work with that dollar cost averaging situation that I got on this chart. Remember, check the links in the description down below. You can join our Telegram channel or get a new brokerage with a special sign-up perk if you haven't already explored those options in the description down below. Last thing I'll leave you with is, remember, the Edge Finder 40% off sale is ending soon. It's our biggest discount that we do all year long. Don't miss it. Thank you very much for watching. I hope you have a great trading week ahead. See you next time.